Eric Muathe, Muathe.com. Let's take a look at PLUM's move in early 2017. We can see that it had a nice move from about, let's call it under $1 to the highs here of about $7. So that's a good spike. Anyone would like to take part of this advantage if there's such a move in the future. So we always want to go back and check and see whether there was anything in the charts that would have probably given us an idea that potentially there was this type of explosive move hidden within the stock. Don't forget that the stock had been in a downtrend for a period of years, and then suddenly bang. So let's take a look. This is a 2-year weekly. Let's take a look at the daily. But before I do that, let me show you, to save time, in the description of the video, take a look at a playlist, a link to a playlist where I discuss the method. It's called the Muathe Virgin Breakout. Lots of videos. So check out that link if you want to understand this in detail. Now let's take a look at the stock. Go to the daily chart. And based on the method, which I call the Muathe Virgin Breakout, you can see here we had a flat 200-day moving average. Actually, excuse me, that was the 50-day moving average. And the other one is the 200-day moving average. So this is the 200-day moving average. So as not to confuse you, this line here, the green line, and the blue line here is the 50-day moving average. So we had a flat 50-day moving average, and the only way the 50-day moving average can coil higher is with a breakout. And what you do, you take the highest daily close above the 50-day moving average when the 50-day moving average is flat. Again, when the 50-day moving average is flat, you use the highest close during the period where the 50-day moving average is flat. And if you ever see a breakout, like here we see a breakout, that tends to be a good buy signal. So that's an entry right there at about $1.60, $1.70. Now, there's also a period here where we have a flat 200-day moving average. Hope you can see that. The 200-day moving average is flat. The only way we can get this movement to the upside of the 200-day moving average. So the 200-day moving average was trending lower. It came here, it went flat. The only way it can coil up is with a price explosion. So what you do is you take the highest daily close while the 200-day moving average is flat. And any breakout above that daily closing high is a buy. And you could have been taking advantage of this move, this explosive move from about under 350 to the current highs here of just below $7. That took about 2 to 3 days. And again, we are using the flat moving averages to try and time an entry and see whether we can get. These are the periods where we had a flat moving average. So number one, we take this daily closing high. Any breakout above that is a buy signal. We have a flat 200-day moving average. We take the highest daily close while the 200-day moving average is flat. So that's a buy point. If it breaks out, you want to take advantage of that and see whether you can get any part of this explosive move. So there is a method based on the weekly. This is how it shaped out on the weekly. And I was showing you that on the daily, there was a method that you would have used to at least get part of this move. And again, take a look at the link of the a link in the description of the video where I'm going to go into details, lots of examples where I discuss this method that I call the Muathe Virgin Breakout. Eric Muathe at Muathe.com. As always, good luck, peace, and blessings. EACS. Woo. So lots of videos. Yeah.